All right, welcome to Talk Tickers, where we're digging into the latest earnings calls moving the markets. Today, it's all about youth apparel retailer Zumiez. Their Q2 numbers just dropped, and boy, did they make some waves. The market's reaction? Well, let's just say it was fast and it was big.
Yeah, check this out. The second these results hit the wire, investors just jumped on it. We saw the stock rocket up almost 12% in after-hours trading. So the big question is, what exactly was in this report that got Wall Street so excited? Let's break it down.
Okay, so first up, the beat and the pop. We're going to look at those headline numbers that really caused that initial jump in the stock price. It's all about figuring out why the market had such a strong positive reaction right out of the gate.
And here you have it, a clean, simple beat on both the top and bottom lines. I mean, look at this. The company lost only 6 cents a share, which is way better than the 11-cent loss analysts were expecting. And then you've got revenue coming in almost $4 million ahead of what everyone predicted. You know, in a retail environment as tough as this one, beating on both fronts, that is exactly the kind of green flag investors are dying to see.
But here's the thing. To really get why the stock popped almost 12%, you got to see the bigger picture. This wasn't some random stock just waking up. If you look at the month leading up to this report, Zumiez was already on an absolute tear, leaving the rest of the retail sector in the dust. So this great earnings report, it wasn't just a spark. It was like pouring gasoline on an already raging fire.
All right, next section. We're looking behind the strong quarter to see the real drivers of success. Because, look, a big beat on earnings is awesome. But the real question on every investor's mind is, how did they pull it off? And more importantly, can they keep doing it? Let's pop the hood and see what's really going on.
So there are really two key numbers here that tell you almost everything you need to know. First, look at that gross margin. It expanded by 1.3%. That is a huge deal. It's a sign that they aren't just slashing prices to get people in the door. They actually have some pricing power. And second, comparable sales. They were positive for the 5th quarter in a row. This isn't a fluke, folks. This is a real trend.
And all of this is built on an absolutely solid foundation. Just look at their balance sheet. They're sitting on over $100 million in cash and, get this, 0 debt. That's huge. It gives them so much flexibility. Plus, they're keeping their inventory flat, which means they aren't getting stuck with a bunch of stuff they have to put on clearance. Oh, and what are they doing with all that cash? They're buying back their own stock. That is the classic sign that management thinks their shares are cheap. They're betting on themselves.
Okay, moving on to management's playbook. Because having a strong balance sheet is great, but you've got to have a plan to go with it, right? So what exactly is management's game plan here? Let's take a look at the strategy that's actually making all this happen.
You know, what I like about management strategy is that it's refreshingly simple, but it's also clearly effective. It's basically a 3-step playbook. 1. Grow sales. 2. Make sure that growth is actually profitable. And 3. Use your strong financial position to reinvest in the business and give back to shareholders. And this isn't just some theory on a PowerPoint slide, right? We've already seen the proof. That comp sales growth, that's pillar 1. The margin expansion, that's pillar 2. And those share buybacks, that's pillar 3, right there in action.
So if you were wondering, okay, where is that extra profit margin coming from? Well, here's your answer. Their own private label, in-house brands now make up a record-breaking 30% of all sales. And because they own these brands, the profit they make on them is way higher. This isn't just some little side hustle for them. It has become a core engine driving their entire profitability.
And hey, don't just take my word for it. Listen to the CEO, Rick Brooks himself. He said that sales trends actually accelerated as the quarter went on, and he pointed right to their new merchandise and customer initiatives. I mean, that's management basically looking you in the eye and saying, our plan, it's working.
Now, it's not all perfect, of course. When you look at where the sales are coming from, there's a huge split. The core business here in North America is absolutely firing on all cylinders, up over 4%. But Europe is a pretty big drag on the whole operation, with sales down 5.5%. So this is really the key thing investors are watching right now. The big question is, can the strength here at home keep overpowering the weakness they're seeing overseas?
Okay, so that's a wrap on the quarter that just passed. But we all know the market doesn't care about the past. It's all about what's coming next. So let's shift gears and look at the company's guidance, and then we'll give you our take on what to watch for.
And wow, their outlook for the next quarter, it is dripping with confidence. They are guiding for comp sales to grow somewhere between 5.5% and 7.5%. Now, let me just remind you, they just posted 2.5% growth, so management is telling the street they expect that growth rate to more than double. That is a seriously bold forecast.
So you might be asking, okay, where's all this confidence coming from? Well, it's coming from this number right here. This guidance isn't just some wild guess. In the very first month of Q3, which covers that super important back-to-school season, their comparable sales were already up a staggering 11.2%. The momentum isn't just real, it is picking up speed.
Okay, so let's put all the pieces together. We have a solid earnings beat, we have a fortress balance sheet with no debt, we've got a clear strategy that is actually working, and we have guidance that points to even faster growth ahead. So, the question is, what's the final verdict? It's time for the next call.
Here at Talk Tickers, our rating for the next call is outperform. And the thesis is pretty straightforward. The incredible execution we're seeing in their core North American market, plus those huge margin gains from their private label brands, is creating a wave of momentum. And we think that momentum is strong enough to more than make up for the weakness they're still seeing in Europe. Bottom line, the comeback story here is real and it's gaining steam.
And as always, we have to end with our final reminder. Please remember, this is not financial advice. This analysis is just for informational and educational purposes.